All right, ticker shockers, Dave here, and today we're diving into a solar powerhouse that just got a significant boost from Washington. Can new tax credit rules unlock even more growth for First Solar, or is the market jumping the gun? Let's find out. First up, the big news. The U.S. Treasury and IRS have just released updated guidance on clean energy tax credits. Crucially, they've largely eliminated the 5% safe harbor option for wind and solar projects. This means developers now need to show actual physical work on a project to qualify for these valuable credits, moving away from relying solely on initial expenses. Now, there's an exception. Smaller solar projects, those with a maximum net output of 1.5 megawatts or less, can still utilize this 5% safe harbor. This guidance is a game changer for developers, as projects need to kick off construction within a year or be operational by the end of 2027 to snag expiring tax credits. So, who is First Solar? They're a major player in the solar energy space, designing, manufacturing, and selling cadmium telluride solar modules. Think of them as the folks turning sunlight into electricity using a specific, efficient technology. They're headquartered in Tempe, Arizona, and have been in the game since 1999. They serve a wide range of customers, from large utilities and independent power producers to commercial and industrial companies. In terms of financials, First Solar has been on a serious growth tear. In fiscal year 2024, they raked in over $4.2 billion in revenue, which is a massive 26.75% jump from the previous year. And that follows a similar strong growth rate in 2023. Their earnings per share, or EPS, has also been trending upwards, with forecasts predicting substantial growth reaching over $20 per share by the end of 2025. Their primary revenue driver, by a landslide, is their solar module segment, bringing in nearly all of their $4.2 billion in FY24 revenue. Geographically, the United States is by far their biggest market, accounting for a whopping $3.9 billion of that revenue. They've also got a strong contracted position for their U.S. production through 2028, which is fantastic. Now, let's connect this news to First Solar's bottom line. This U.S. Treasury guidance, specifically the elimination of the 5% safe harbor for larger projects, really impacts their U.S. market, which, as we saw, is almost 93% of their business. The market's reaction has been overwhelmingly positive, with the stock surging anywhere from almost 9% to over 10% on the day this news broke, and some analysts like UBS even named them a top pick. This clarity on tax credits reduces uncertainty for developers, potentially unlocking more projects and thus driving higher demand for First Solar's modules. So, how do we get to that number? First, the news affects their biggest segment, which is over 70% of their business, and specifically their largest market, the US. We're estimating a positive revenue impact, let's say a 5% increase for the next quarter. Now, here's the key part: operating leverage. For a company like First Solar with significant fixed costs in manufacturing and R&D, we're using a multiplier of 2.0. That means for every 1% change in revenue, their earnings are likely to change by 2.0. So, that estimated 5% revenue boost multiplied by 2.0 gets us to a 10% positive impact on earnings. Now, to put that into dollar terms, looking at their projected FY 2025 EPS of around $20.79, that 10% bump translates to about a $2.08 in EPS. We've also looked at different scenarios. While our most likely scenario sees a positive $2.08 impact on EPS with a good probability, if the market really latches onto this clarity and the US market accelerates faster than expected, the impact could be even greater. Conversely, if international market headwinds, like those tariffs they mention, become more significant, or if U.S. project development slows for other reasons, the upside might be moderated. The market's reaction since the news broke clearly indicates a bullish sentiment. As you can see here, the stock saw a significant upward move, with heavy volume, suggesting strong investor confidence following the tax credit guidance announcement. So, what's the final verdict on this news? Good news. The clarification and modification of clean energy tax credit rules removes significant policy uncertainty for First Solar and its customers, which is likely to drive increased demand for their solar modules, especially in their core U.S. market. My take? I'm issuing a hold on First Solar right now. While the news is definitely positive and indicates strong potential for future earnings growth, the stock has already seen a significant run-up. We want to see if this optimism translates into concrete Q3 and Q4 results before considering a buy. That's it for this edition of Ticker Shock. If you found this analysis helpful, smash that like button, subscribe for more, and hit the notification bell so you don't miss our next episode. And remember, this is for educational purposes only, not financial advice. Always do your own research before investing. See you next time.